Hello, welcome. Thanks for joining me for Money Monday number 2. Today I'm talking about down payment options. As I get started, I would like for you to answer our poll question. So, what is the least amount of down payment you must provide to buy a property? So, A, 3.5%, B, 5%, C, 10%, or D, 20%. Okay, so before I get started, I'm Francesca Sorbis. I work on a team with my husband, Danny Sorbis. I'm a mortgage officer. He's a real estate agent. And we are Sorbis RE Services. So you can check out our page to know more about us. Please add any questions or comments as I go through the video, and I'll make sure to address them. So down payments, let's get back to down payments. So I'm gonna wait to answer the question for another minute here. So 3.5% is actually the least amount of money you need to purchase a house. You can do that with an FHA loan, and with conventional loans, the least amount is 5%. In another session, I will go over what the difference is between conventional and FHA loans, but today we're just going to stick to down payment options. So in terms of down payments, we know those are the amounts. So now we want to think about, so how do I decide how much I should put down for a house? So you first want to think about the stage of life that you're in. If you are older, if you're closer to retirement, you're going to want to make a larger down payment if you're making a purchase, right? Because you want to minimize your debts as you get closer to retirement. If you're younger, you want to think about what are your financial goals? What are your expenses that you have coming up? What are your life goals that you want to, how do you want to utilize your money? So if you want to invest, if you want to make some purchases that you need, and you always want to make sure you have enough in your emergency stash, then it's okay to have, move forward with that lower down payment option. Especially if you're renting, if you think about it, once people start to see the amount of money that mortgages are, they realize that it's the same or even sometimes less depending on the home that they choose to purchase a home than to keep renting. A lot of clients are surprised by that. So you'll find that you're almost spending that same amount, as I said. And if you think about that, when you're spending that same amount of money, why not invest it towards, your future and invest it towards having, something for you down the line versus just kind of throwing that money out the window as you're renting. Another doubt that many people have is that a larger down payment is going to get you a better interest rate. Well, that's not necessarily true either. Interest rates are slightly affected by the down payment, but not enough for you to not move forward with purchasing a home. So let's see here. My Facebook was acting a little funny, so I see Carrie's here. Thanks for joining. Nick and Victoria, Diana, John, Matt, thanks for joining me. Giovanna, thanks for joining. I see you all. So like I said, larger down payments don't necessarily mean that you will have a lesser interest rate. I've had lots of clients that have had 20% down, but as we worked the numbers through and we thought about, okay, what your monthly payments are going to be, what the interest rate's going to be, a lot have decided to actually put less than 20% down because it made more sense for them to have that liquid cash available for other things that they were doing. And you especially don't want to use all of your funds to make that down payment in case something happens, you need to make home improvements. But work with a loan officer that's definitely going to go through those options with you so that you can figure out, okay, what's the difference in the monthly payment? Is it worth it to make that money? Is it worth it to save some of that money and have it in case you need it? So there's that. Another thing to know about down payments is that there is private mortgage insurance. So when you don't put 20% into your home, when you're purchasing, you will get charged a private mortgage insurance. This is so that the lender feels more confident in lending to you. And since you're not putting a large down payment down, the lender feels like it might be easy for you to walk away for the home. So what they do is they charge you this private mortgage insurance. But once you do get 20% equity in the home, then that mortgage insurance does get canceled. So hey, I see you, Tom and Carrie and Alexa. Thank you for joining and watching this live video. And you know, we were talking about down payment options, 3.5% for FHA loan, 5% for a conventional loan. Are just the lowest amounts that you can to purchase a home. Talked about interest rates don't really get affected too much slightly by the amount of down payment, and without putting a large down payment, or 20% down, you will get a private mortgage insurance added to that. The amount of that private mortgage insurance will depend on your loan amount. It will depend on your down payment amount. So once you've reached 20% equity in your home, that, like I said, that PMI will be canceled. Some people want to wait to buy a home because they don't want to pay the PMI. They feel like, what a waste of money. Why am I, buying if you're having to give away this money? It's an insurance that I'm never going to get any money back on. But if you think about it, especially if you're renting, you will end up, it's going to be a lot less the amount that you're renting and then not being able to put, into a home as in equity. So if you're spending $1,000, on rent, PMIs are usually a small percentage. They're maybe a couple $100 sometimes they're $80. There's a big range. Like I said, it depends on what your down payment amount is, and it depends on your loan amount. But they're usually, I would say, not enough definitely to deter anyone from purchasing. You should definitely not let PMI be the reason why you don't purchase. Because that amount of time that it could take, you could really save and apply. The amount of time that it would take for you to save all that money to put the 20% down might be a lot longer. You're going to be able to put a lot more money in equity in your home, even if you had to pay PMI. Something else that's good to know is that a down payment can be gifted to you. If you have a family member or someone that's generous enough to gift you the down payment, there are certain loans that will allow a borrower to have their down payment gifted to them. It has to be a gift. It cannot be a loan that has to be repaid. And lastly, down payments are separate from closing costs. Down payments are a portion of closing costs, but they're not all closing costs. And I'm actually going to go over closing costs next week. So next week's Money Monday will be explaining what are closing costs, what it all entails. Does anyone have any questions? Also, if there are any other topics that you or someone you know would like for me to address, please add it in the comments and I will make sure to address that topic. Don't forget to subscribe to my live notifications by clicking the follow button. And I will see you again next Monday, Money Monday. For next week, we're going to spice it up. We're going to do cocktails and closing costs. Well, cocktail for me, and then we'll talk about closing costs. And if you have a cocktail, we could all be having cocktails together. But thanks so much. Thanks for joining, and we'll talk soon. Alexa, I don't do classes, but part of my job is to advise and work with individuals to help them purchase. That's part of what I do as my job. So I can definitely talk to anyone. Great question. Thank you. All right. No other questions. I'll see you guys again next week, and we will talk about closing costs. Have a great night. Thanks.